Hello guys, and welcome once again to my YouTube channel. So in this particular video, I want to share something that is so dear to me, something that is close to my heart in terms of value, in terms of what I understand it to be. So I'm just going to actually openly talk about one of my major trading goals that I have currently, which is literally to become the first youngest, um, not necessarily the first, but the young, a very one of the youngest billionaires in trading before 30. Of which currently I feel like publicly, most most people that I've seen are basically realizing their millions in terms of dollars, mostly above 30, mostly the ones that I know, most of the millionaire traders that I know personally, that I know fully confirmed, fully verified, they're above 30. Yes, few they are there, some few that are also still under 30. But me, I'm talking now in terms of the $1 billion, in terms of making $1 billion before 30. That's one of my biggest trading goals currently. Me realizing my first $1 billion before I reach 30. Currently, I'm 23 years old. That's my real age for some of you who might have been wondering, but that's not a that's not a factor when it comes to understanding and wisdom. You know, wisdom and understanding, it's it's no respect of all of that. So I'm going to reveal one of my main trading strategies that I'm going to be applying in order to reach that $1 billion before 30. Currently, as I said, I'm 23 years old. So technically, it means I only have 7 years to make that $1 billion, of which, according to me and according to what I, I now know about the charts, it's 100% possible for me to realize that goal. So it's a goal that I'm publicly sharing now, so that 7 years from now, before even we get to 7 years, because I feel like I'm literally going to achieve it before that 7 years threshold that I've given myself. I'm literally going to achieve it in lesser time than that. The 7 years is just the period that I'm showing you guys. But at the end of the day, it's going to be a very interesting journey, which I strongly believe many people their eyes will be opened up to what the amount of potential that forex trading has to literally transform someone's financial life drastically. So that's one of my major trading goals currently, becoming the, let me say, the first known youngest trading billionaire below 30. The first known in terms of dollars. I'm not talking about rands. But in terms of rands, I know certain few, one or two or three individuals that have reached a 1 billion rand. Yeah, there are few, very few. They're even less than 10. The ones that I know, fully verified and everything. But now I'm talking in terms of dollars, being the first youngest billionaire trader before 30. So personally, even my students, some of them, I've always explained this thing to them, whereby I've always told them our financial appetites are all different, right? Depending on the goals that we have, the vision that we have for our lives, depending on what we really want to happen in our life. So our financial appetites differ. Certain people right now, they've hit a million, whether a million rand or $1 million, and already their financial appetite is full. So are the same people. So it all goes back to an individual. Most of these things, it all goes back to you as an individual. What do you really want for yourself? So at the end of the day, if you increase your financial appetite in terms of having a bigger vision, you will realize that the same almost the same process or the same principles that will get you there, and the same principles that will get someone to $1 million or even $500,000 or even $100,000, whatever figure that you might, the same principle, like the principles, the technical principles are still the same. The only difference there is in terms of goals. So people, they feel like if you put it like $1 billion before 30, someone might see it as something too huge not to be achieved. Yet ironically, the same principles are the same principles are still the same. The same principles are still the same that will be applied even from that first $100,000, $1 million, whatever, 10, $100 million, up until you get to that billion. So the principles are still the same. Some people they don't understand all of that. So I'm going to be basically showing you how even if I let's say I'd given myself this goal um 16 years ago. For example, I'm going to start my strategy review as far as showing you even as far as 2008. 2008, that's where the Great Recession was, and I'm going to actually start my back testing there. It's not I'm not necessarily testing, but I'm basically showing you how my strategy would have worked if ever I was trading at that time. Of which I think 2008 I was roughly I think I was 7 years old. Yeah, I think I was yeah, 7 years old. Yeah, 2008 I was roughly 7 years old. So now, if I had this opportunity at 7 years old, I believe even that goal, if ever I had developed it there, maybe I could have achieved it earlier. Yes, who knows? Maybe I could have even achieved it earlier. You understand? So today, I'm speaking today. Today, the date is what? Today it's 16 June. The 16th of June, 16th of June 2024. And I'm actually saying I'm going to become the first known. Let me say the first known. That's a more humble statement. The first known youngest billionaire trader before the age of 30, right? I'm actually saying this publicly, and it's going to be there published publicly. I don't even have any problem with that. Um I don't feel that there's any pressure that I'll receive from anyone or anything, because I'm not beyond the level of being controlled by outside pressure and whatever. So I still determine even the pace that I'm going to move with. But I'm just it's just something that I just chose to freely come up in the open like this and actually share with you publicly. Right. So if you go back to 2008, um, October 2008, that's where, as I said, that's where I'm going to. This was gold. Gold back then in October 2008. I've heard statements, people saying the markets have changed, the markets have changed. That's all a lie. The markets, the way the markets move, necessarily, technically, it has never changed. The same way price was moving in 2008 is the same way price is moving even today, right? The only change that I can say people will be trying to explain, maybe sometimes you can find that the market maybe is in a downtrend, sometimes in an uptrend, whatever. So technically, that might be the change that people will be talking about. Or maybe you see the market starting to move fast or slow on major news events. Like, so that those are maybe potential changes that people will be trying to explain. But technically, when you're looking at things from a technical point of view, realize that the markets have never changed. They're still the same markets, the same way they were moving in 2008, which is literally 16 years ago. It's still the same way they are moving today in 2024. So yeah, this is October 2008, and this is on the monthly time frame. So when I have my structure like this, the most important thing is, first of all, this highest point, like that highest point, like that. Once I bank my highest point, then the most important also information is information to the left, of which here information to the left, you see that we're strongly bullish, right? Of which our major bullish leg in this case, it actually started from down here. After they, it just maintained bullish structure, bullish structure, bullish structure. So ironically, this is my major leg on the downside. I can say that leg and this leg, right? Then there we came and we made that. So you can literally see that overall gold was literally bullish. It has actually been bullish. Gold, remember, is a commodity. So and if you check the value of gold today, it's crazy. It's crazy. It's crazy. Back then, 2008, if you check here, there was a fall on the price of gold. Even if I want to look at the fundamental side of things, there is something to even explain. So we are not talking about that in this particular video. We'll talk about that some other day, whereby I'll show you even how fundamentally the price of gold has increased and where it's potentially going to go, even just looking from a fundamental perspective. So yeah, if you look at it, that was a retracement, right? Of which the first retracement here, it happened into this major institutional zone here. So once they tap that major institutional zone, the most important thing is structure shift, especially on the weekly, on the daily, on the lower time frames, basically. That's what I mean. So Once it taps a major level like that, for example, yeah, this was a retracement they've done, some shifts to the left side to show me that that's a leg up there. If you notice here, throughout this entire movement as they were going up, they didn't shift necessarily to the downside. That's why there's no leg that I drew there. So here that was an upside range. Same way here, that was also still an upside range, still an upside range here. There was no structure shift to the downside, basically. That's what I mean. So there was the only structure shift that had now happened was literally around here. So that shift to the downside, it literally made that a leg, which is a swing higher high. In this case, then this is what some people can call an adjustment. Someone can call it a market structure shift, whatever. It's all about understanding the essence of that current situation. Once you see that happening, what is to follow? So they tapped the level there, of which now remember they've so many levels that they could have tapped. There's that level, this one, of which most of the levels down here they were marked, they were tapped. Most of the this one they came back to it, this one they came back to it. So they were actually forming something like a barcode. If you look at it, the last level was this one, which they tapped it here and also they tapped it here. So technically, also speaking, that was also one of the major levels that they were bound to turn on. So once I've done like this on the monthly, I always go to down to the weekly. So if you go to the weekly, this was the zone. Where is the zone? Let me go back and see where exactly the zone is. It's literally here. Okay. Let me just stretch this. Let's go to the weekly. Right. Like this. So if you look at structure inside there, they were literally falling to the downside. Let me play. Right. So structure was just playing around there, still bearish inside there. But even though it was still bearish inside there, I know even the overall bearish is still a retracement, right? It's not like the main direction there for that moment. It was just still a retracement to the downside. So yeah, what I like now, if you go to the daily on that same region that they tapped here, which is exactly the zone that I marked, right? So that zone that I marked, if you notice, I marked it on the monthly, right? Because according to that whole structure there, that's one of the main levels that is there. That's one of the main levels of which now, if I go to the daily, going back to the daily on that same zone, if you look inside structure, they were bearish throughout that entire movement, right? They were bearish and they were literally breaking, giving you this minor internal bearish order flow or bearish structure to the downside, which all the were obviously there were opportunities that were there, of which technically they were still, I can say there were still counter opportunities as well as ones that were in alignment with the overall trend. So yeah, someone could have taken some sales from up there, right? Even when they got here, you could have taken some buys, maybe upon this upside shift. Then when they turn here, you could have taken sales up until they tap this region. Because now, if you if you are using this idea that if you mark if you even if you had marked this level beforehand, you're basically going to use that as a point of focus or a point of interest for those counter trades that you're taking. So you're still expecting strategy to remain bearish up until it taps there. Maybe the only time it will change is after tapping there. So all of those were opportunities that were available for entry. So once they tap there, the most important thing that I look for is just the structure shift to the upside, of which here in this case, this was the shift, the proper shift to the upside was here, right? After they did that shift, the most important thing now. So in that case now, uh, if I'm looking at it from a swing trader's point of view or even a positional trader point of view, you realize that even before they went to shift there, they literally also did certain inside shifts here, whereby here they shifted up, here they also shifted down, up here, down here, then up here. My last up was literally here. So I could have even entered earlier there as well. That was also another entry that, so this one, that was the earlier entry of which this was the confirmation. That was the confirmation and another confirmation as well also that we're now overall going up is when they now changed this inside a sort of like bearish order flow structure that they were giving. So in this case here, right here on this zone, that was where my um my buy trade or my buy position was basically going to be. So yes, someone can say, why is he just mentioning on the daily? That same zone, even if I go down to the here now, the thing is, if I go down to 4 hour H8, the what do you call this? The bars can't go as far as 2008 or they on the H4 or H8. That's why potentially I can't go there. But the idea is still one and the same. The idea is still one and the same. So yeah, entering there, obviously I'm still here, even though we're still inside bearish, but obviously I'm now anticipating that overall inside structure to change because of what the level that we tapped there. So even if I followed there, that was my first entry there. My next entry here was going to be here, because here we had a slight retracement. Of which that slight retracement, it just came back and tapped this demand inside there. Then they shifted, so I could have bought there. If you follow structure, then they also did a slight pullback again here. And even after that pullback, they realigned again and continued being bullish. So when those pullback, during those pullback moments, obviously, someone can literally decide to exit certain trades, right? But when you know overall where we are heading towards overall in the long run, you realize that as you mature on the charts, there are moments where you might not need to exit. Obviously, there are other moments where you can exit, especially if you're in good profit. Let's say here you're in good profit, you would have exited there when they shifted down. Then when they reshift, you enter again, exit there, re-enter there. So someone can you can do it in that way. But also now, when you grow and mature and realize most of these things, or when you realize most of the directions where the market will be headed, you definitely need you realize that most of the other positions you won't necessarily need to, what do you call this, to exit, right? So that was basically what was happening. And here now, take note, they've changed this inside character. Changing that, it means simply means they are going to maintain this bullish order flow or this bullish market structure that they've already presented inside here. They're going to maintain it because they're going to break major structure there. So they're going to maintain this here. Even if they give a pullback, it won't go and exceed this. So here, once they give you a shifted upside, that's a buy. That's a buy like that. And here, let me just stretch this out, of which they tap the demand there, right? Of which once they just do that visible upside structure shift, that's when I strike, which I believe they did it around those levels there. Let's play and see what literally happened. They literally did it exactly on that zone that I marked. So there, when they did that structure shift, that was an entry there that one could have actually entered. And the only area you could have put a stop loss was literally below this um here. When they came back to this level, they did the shift there, came back to test that level. So the only stop loss that you could have put was maybe just below here, or even just here. Of which now, if you go to the, if ever you with access to the H8, H1, I could have even shown you how you could have gotten a smaller stop loss, even low, higher than this, right? But now for the fact that, so that one you'll see it in the next coming episodes that I will do, maybe as I'll be continuing, because I'm not going to finish this all in one sitting. This is just going to be episode one. I'm going to go slowly on different pairs, of which I've just decided to start with gold, since it's a pair that I've seen many people have developed quite an interesting interest in gold. Maybe because it's volatile, and also maybe because you can definitely realize profits faster in terms of, I'm talking in terms of pips and whatever. Even the movement, it's so volatile also. So I think that's why many people they actually have an interest, which is good, especially if you know now the technicalities of what really moves price up or down on the charts. Once you understand those dynamics, you will definitely realize that once you, for example, if you are someone like me, right, as I've given myself this goal, of which is a goal that I think I've been having it for mostly, the idea, it came so strong mostly this year, obviously, right? The beginning of this year, this idea that I'm talking about now, right? So with such a goal like that, I have the capacity in terms of knowledge, in terms of skill, in terms of, I have it, right? So it's not something that I'm guessing that I'm going to do. It's something that I know is going to happen, right? That one, I don't even need anyone to to even tell me is it going to happen. Is I don't we don't it's we no longer need that, right? Because I know it's going to happen, and I have the knowledge, the abilities, the everything I have. So there's nothing here. There's not there's I've heard people say, hey, don't tell your dreams, blah blah. That's all bullshit. It's for someone who still has what do you call this? Someone who still has other people as the validation to their dreams happening or not. If you have people as the validation, definitely there are certain people that you don't need to tell. But when people are irrelevant now of the manifestation of your dreams and whatever, you definitely don't need any approval from someone to become whatever version of yourself that you want to become. So personally, I'm publicly coming into open like this because I know people. I can't be influenced by another person in terms of whether my dreams are going to happen or not. You understand? So they, if you notice from this November 2008 up until September 2009, gold was just bullish. So imagine now, throughout that entire time, many people now, what they don't understand is these charts, they are not even confusing as what people think. So imagine here when they turned bullish here, which was basically November, December here, I was focusing on buys, right? Buys, buys, buys. Then here when they give me a pullback, uh, even if let's say, even if I not necessarily neglect the pullback, even if I entered certain trades on the pullback, right? Obviously on the lower time frames, using H4 lower time frames and whatever. I'm still having that idea that we're still bullish, right? Still maintaining the same bullish idea. Then they realigned, which means we're just continuing with buy. So most of the times it's wise to just follow where the overall direction is going because it's easier that way. It also helps you to keep remaining focused on the main trade, on main trend actually. So yeah, those were all buys. This was just a huge retracement. So here throughout here, as we were going up, as we were bullish here, even if I wanted to mark structure here, that was a higher high, higher low. That was a higher high, higher low. So by the time they create this higher high, if you notice here, the time they gave me a shift of structure to the downside around here, right? That's the shift that I'm talking about. So when they give that shift there, so even if I could have exited there, right? Of which I know that if due to what they've done, obviously changing this inside structure, they are now coming and taking out that, right? But obviously, before they do that, they're still going to maintain this inside bullish market structure. So I could have also waited for this, even if I could, even if I wasn't folding my hands waiting, even if I was going to take any positions, I was going to take them within this range of this higher low and this higher high. So obviously anticipating this level for a potential movement there. So I could have that's how I could have traded. I could have traded. Remember, I said 2008. I was basically 7 years old. And if you're like most of us coming from this part of the world, Africa, most of these things, most of these forex trading or online ways of making money, they usually come late. They usually come late in terms of in terms of where in families or whatever. It comes late. Imagine I was 7 years old. If ever, let's say I had an uncle who was a trader, imagine. And then at 7, you started grooming me. Imagine if ever I had such a situation like that. Obviously, it was going to be something else. Today we wouldn't be here. But now, nonetheless, I'm not complaining about anything. I'm just telling you how we have mastered the charts to an extent that we can even go back to the year that I was born, 2001. I can even, if I had access or time to go to there, I would have shown you that the same movement is the same movement that's happening even today, 16 years ago, 16 years later. So it's the same movement that is going to happen even 7 years later, of which in less than 7 years, as I said, I'm going to become, I will be, I would have clocked $1 billion in terms of trading profits, right? It's not a joke. It's not a prank. We don't do pranks here. We talk the truth. We talk reality. We talk facts as they are. So that's it. It's something that I very interesting. So yeah, if you notice here, they just maintained bullish order flow or bullish market structure. I believe they also finally did that. So when they eventually hit our major target like that, the most important thing I do is to just go back to the monthly, right? Go if you go back to the monthly, obviously that was our first target. Of which, if you notice, just from here up until they finish there, right? Of which, even after they finish, I don't necessarily lose direction of that trend to say this trend is now changed from being bullish, it's now bearish, right? I don't do that. right? I can even extend my idea of wait my 10 to be bearish on the monthly inside, for example, here inside bearish, because once it's inside bearish, that's where you can start to have those major pullbacks or whatever. So sometimes I can even extend my Fibonacci like this and mark some levels on the Fibonacci that they can potentially tap 10 onto 10 on, right? Because remember, if there's no new structure up there, that's one of the ways you can do that is through the Fibonacci. I've seen other people using trend lines, whatever. Yeah, it's also an idea. It's not also something that you can it's also something that you can use, I mean, whereby someone could have drawn this trend line here from the bottom to the top. Okay. Maybe trying to look for the next top. Someone would have drawn something like this. Of which there's nothing wrong with that. There's nothing wrong with that. The idea is here, once we close above, I just want to wait here once we close above so that to show you that even once we close above that zone, right? So they closed above there on the monthly. Oh, oops, it's moving fast now. So they closed above there. But if you go back to the daily, right? They closed above, which was around here. They closed above there like that. If you go to the weekly, you still realize that they were still bullish, even on the weekly, right? Structure was it kept on being bullish. How do I know that? If I mark my previous buying range, like here, this was my buying range in this case. Had they maybe taken out that buying range, they were going to give me a slight pullback before the offer continuation. Maybe within this inside structure like that, of which they just gave me that lower time frame retracement inside there, then boom. So they were still, I can safely tell you that they were still bullish. So here on the daily, this was just a slight retracement, slight pullback, of which structure was still bullish there, right? Someone can mark this as a structure shift or inducement, blah blah, whatever. Then they broke structure there. So before they even got to broke structure, to break that structure, they would have shifted right here for my entry, and that was where my position was going to be on that in that case, right? So all of these ideas that I'm now, or all of these actions that I'll now be performing there on that daily, whatever, it's something now that is the whole entire analysis. It is started from the monthly, right? Even if I go down, even if I had access to go down to the 4 hour here or H8, I could have shown you that it's the same thing. It's the same idea that is coming from there. All I just do when I now come to a lower time frame is to wait for that moment on the lower time frame, for that moment to happen, right? Once that moment, so if you notice here, negative 27 was hit. Let's see also that trend line was also hit. So throughout the entire time as they were going up like this, one of the biggest things about why can I stand boldly in front of you or and actually tell you that my trading methodology so far, as far as I know, as far as my experience on the charts, as far as what I've heard most people that are traders talking, or the ways that they used to trade that we publicly all know. If I'm going to do a comparison, I feel like my trading methodology is the best lately. The best. Someone can come and try to oppose whatever I'm saying. That's their own nonsense. That's their own idea. But at the end of the day, the results now will always be visible. The results will always be visible, obviously, both in terms of personal things as a person, as well as corporately, whereby we come public like this and actually show you how the strategy works. So around there, that was maybe the point where we're going to exit our, what do you call this, my buys, literally around that whole zone, this whole level here that I marked here, right? Of which obviously on the 4 hour H8, even H1, I could have even seen that shift earlier up there, of which that was going to be, I think, around up there. So throughout, when I'm holding, once we create this new high, new high, new low, already I can protect this trade here. New high, new low. By the time we create new highs, new lows, by the time we have these new lows, I'll just protect all my positions below that low, below that low. Obviously here. And sometimes also there are days where something like this, whereby if you mark the high and the low here, if you look at that low, it was just swept. It wasn't broken. They swept it out. So there are days like those whereby the markets can come and sweep you out, yet still close in your direction. Many people, that's why I always say sometimes stop loss is a burden. It's a burden in the sense that they can still wipe the stop loss and still maintain your entire bias. Let's say you projected that gold is going to go up, gold is going to go down. They will definitely do that. And they might definitely do that if ever you've mastered the game like some of us like this, right? But then you realize that they sweep all the stop losses. Then after sweeping them, they literally close above your zone. That's why I'm going to do another interesting series also showing you how most of these things that you've been taught are basically tools that are being used by institutions or market makers to literally limit you as a trader. So they hit our TP, both our Fibonacci TP as well as our trend line TP there, right? So even after hitting that TP, we don't say that if structure here is still bullish, right? Structure is still bullish. This is now our swing higher. This is now my swing higher low, right? I know overall we are bullish. Externally we are bullish. Even internally we are also still bullish, right? This is still bullish market structure. So let me go back to the monthly. Right. So if I go back to the monthly, right, we're still bullish on the monthly, still strongly bullish on the monthly. And take note, we are now already in 2010. Since 2008, since 2008, we're bullish, 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 bullish. Since November, December 2008, the whole of 2009, we're just bullish, bullish, bullish. Just having those minor retracement sells, but overall, we're bullish, bullish, bullish. So now this was now January 2000. So imagine for a whole year being bullish, a whole year being bullish, a whole year the market being bullish. All you're just supposed to do, focus on those major zones. Once you focus on those major zones, even if you go to a lower time frame, all you do on the lower time frame is basically to to what do you call this? To align your analysis, align your trades, align your setups with that overall higher time frame idea. So they once they've done like that, as I said, even if I go to the weekly like this, uh, you play. Let's see if ever that retracement is going to go. For example, here there's a demand that is there, slight demand that is there. The most important thing for my methodology is always the structure shift. That's the most important thing, even on the lower time frame there. If ever, let's say the higher time frame bias is not clear, sometimes I can even use those lower time frame to confirm a certain idea or a certain projection that I'll be having, right? For example, here you can see that this overall still a pullback according to the daily. Still a pullback, right? It's still a pullback. And the most the most interesting thing about even this lower time frame pullbacks, right? That's a zone like that. And if you notice something interesting happened here within this region, if you look at this, there's a point that I just want to mention. Let me pause. There's a point that I want to state here. Right. So if you look at it, if you look at how do you call this? Let me remove this. Remember, I said that's just an idea to project how far we're going to go up. But remember, I also have other TP levels based on my Fibonacci, et cetera, et cetera. If you look at it from the monthly, right? If you look on the monthly, the bullish range, it was still maintained here. That's why even that daily structure turned on specifically this zone. I've heard other people asking, why are certain order blocks left out? Why are certain demands not tapped? Blah, 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 etc., etc. All those things, like if you look at it, it all goes back to understanding whereby if you understand most of the dynamics of these things, right? For example, yeah, this was still a bullish range according to the monthly. If you go to the weekly, right? If you go to the weekly internal structure, even internal structure here is still bullish, right? Because this is still a higher low, that's a higher high, and this is just a pullback, right? Even according to the weekly. And here you can literally see that they shifted here. So meaning according to the weekly, that's where even the higher low was introduced. So you get to understand that most of these things, once you really understand them deeper, 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 you realize that we can even predict where the next higher low is going to come. I can even tell you where the next major, whether it's a major internal or external higher low or higher high or whatever of gold or whatever pair. We can even project and tell you where it's going to come to. It's not something, it's not guesswork. It's not, it comes with with deeper understanding. It comes with deeper understanding. So here, the most important thing, whenever even even when that pullback began on the daily, right? The most important thing is to mark that highest point, right? But obviously also know your major overall structure here, of which it was bullish, of which if you went to the monthly, you would have marked this high, this low, and this high. That was your current major focusing range. That was your major focusing range there, the low and the high, right? So that was your range. Then so that even on the daily when they now reshift there on that zone, right? Of which that's where the overall 10 happened. Here they came, they couldn't shift up. Then here they came, they shifted internally as well as both sub-internally. Sub-internal is this one, sub-internal shift. It literally happened here. Then this one, internal shift. Then that's the internal overall change there. Something like this. I can put it. So that was the internal change of character was literally around here, right? So internal shift, blah blah, something like that. So here, that sub-internal shift, that was going to be our first entry point, of which even if you maintain the structure, you realize that the candles with they still maintain bullish order flow. High low there, they just came, they sweep the low. In this case here, that's why I told you in the other part that even a stop loss can be a burden to most of these ideas. Personally, I'm now on a level where I'm at a level where I can even trade without a stop loss, right? Not necessarily without it, but let's say I'm active on the chart, right? And I've marked my major levels and I'm in a major trade. Let's say, for example, here I had marked this daily low and the high there as my trading range for that day or whatever, or week, whatever, right? Obviously, it's the daily for that day, right? Then they tap my level there. Then they give me that shift to the upside and I enter. Obviously, now when you're if I go to a lower time frame, the shift mostly could have happened maybe down here, which I could have ended it down there. But when I now go back to the daily, realize obviously now we closed above. So to an extent that even once you shift down there, lower there on the lower time frame, when they come back above the zone like that, they can even enter more trades. Everything that I'm actually talking about right now, remember, the whole idea is to fully express to you guys why this public goal that I'm telling you is something that is going to happen. All of these things that I'm showing you are things that I'm trying by all means. I'm trying to also prove to you that it's not going to be guesswork or by chance, right? I'm also trying to prove to you that point. I'm also trying to prove to you guys that everything happening, everything happening in life is made to happen. Nothing happened. Nothing just happens. The guys who first landed on the moon, they didn't just land on the moon. They actually intentionally, there was that aspect. There's always this aspect of intentionally making things to happen, right? Things are made to happen. Nothing just happens on its own accord. Nothing just happens on its own accord. So these points that I'm pointing and to also other entry points that were available, right? There are actually other entry points that are available. Um, as I said, that even here as well. Let me clone this. The first shift, as I said, on the looking at the daily, it was also here. Let me take this. It was literally here. So there you could have entered even here when they played around there. Obviously, they could have given you that shift on the lower time from H1, even going lower, H1, H4, even if you go lower 30 minutes, 45 minutes, you would have seen that shift. Then boom, they kept buying here. Then obviously that was now a pullback. But here obviously they changed character, showing you that overall now they are now going to come and take out that major leg, right? So sometimes, even if you might scalp these cells, right? But at the end of the day, you know that there is a range that we have to the upside. Even if you go to the weekly, you are still going to mark your range, which was still a bullish range from this low to that high. That was still a buying level, which if you notice here, they didn't go beyond that level. So even where to expect my higher lows and whatever, all those things are things that are predictable. So that's why you could have bought there. You could have started maybe some scalp sales, and those scalp sales. What I do normally when I enter those what do you call this? These counter positions, right? What I do normally, I use my Fibonacci for identifying. You can use your Fibonacci. Fibonacci, if you notice Fibonacci, you tapped 61.8, which you could have used that idea also, right? You could have used that idea also, or also combined it with the idea of liquidity, whereby if you mark a liquidity zone like this, once they come and sweep it out, potentially that will be the zone that they can use. And also there was a demand there. So all those factors are factors that I look at, you actually see that all those factors were ticked on that zone. Fibonacci was hit, demand was hit, liquidity had been swept also. All those factors, even the shift to the upside literally happened here. Here they tried to shift, they failed. So, but literally here they actually came and they succeeded. So when they came here, high low there, if my stop loss was just going to be here according to the daily. Obviously, H8, H4, H1, it was going to be even lesser, slightly above there. But when you grow now to become, you realize that because this go now, you realize that there's a point on the journey where most of these positions, you can even take them from the daily, H4, H8, H1. Sometimes it won't even be necessary. Even if I know how to even go to the M1, M5, M15, M30. I know how to trade using any time frame. But I'm trying to express a point to say you can literally grow in your trading career whereby your equity has grown to a point where sometimes it's not necessarily necessary. Obviously, due to also the schedules that you'll be having, when you're now making good money, you get to that point in the trading where you no longer have that much time to attend to 1 minute, 5 minute time. It's not necessarily necessary there. Also looking at your equity and your balance, right? Let's say you are trading $100,000 account, or let's say 100,000, even $100,000. Let's say you take a position there, you put your stop loss, even maybe below there. Even if it's the normal position, right? That stop loss is it's logical, right? Officially, as I say that obviously on the H4, H8, H1, it's actually going to be lesser than this, right? It actually is going to be something lesser than this, right? But the idea that I'm trying to express is this ideology, this trading methodology is the best that you ever see on YouTube, is the best that you ever hear from anyone currently, as far as I know, as far as results can tell us, right? So here they were bullish. You could have bought on all those positions. So the most important thing after they wipe my daily major target like that is obviously to go back to the higher time frames like the weekly to see where potentially we might head to next. But if you look at here, already this is now year two. Or you remember we started in 2008, and now already we are now in year two, which is 2010. Imagine if ever, for example, if ever I was just trading gold, right? If ever all I was trading was gold from that 2008 even to where the market is 2010. That's like 2 years. In that 2 year span, imagine how much money I could have literally made just applying this methodology as I'm showing you exactly like this. These are the whole thought processes that I go through whenever I'm analyzing, whenever I'm looking at the charts, all the things that I'm stating. Obviously, I can't, I might not be able to list all of them because there are other things that you might not be able to fully expressed to people, but you basically know the whole entire thought process behind all those positions, whatever. So yeah, if you notice, they are targeting so yeah, 0% was my major TP1, major TP2, negative 27, negative 61.8. That's literally major TP3, major TP4 is obviously negative 100. So if you go to the weekly, if you look at structure well, they still maintained bullish structure. Obviously, on the monthly, they also never changed, even if you are using the monthly. So even if you're using the monthly, the most important thing is once I identify my buying range, in this my buying range on the monthly was going to be this is the top of my range. Top of my range is here, like that. Then the bottom of my range is literally that low there. So this was going to be so once you mark like this on the monthly, even if you go to the weekly or the daily, even the lower time frames, you are playing there, but while it's knowing the levels that you're anticipating price to. So if ever they're going to remain bullish on the monthly, they're not supposed to literally exceed this level to the downside, which that's the exact level that they also tend even on the weekly. On the weekly they tend there, which on the daily they could have tend earlier on the daily. So yeah, even if you're now combining this with with this other modernized understanding of structure, right? Whereby you know that obviously want to break, for example, in this case, someone can say we potentially broke structure up there, right? Someone can say that, which it's actually is like that, whereby we broke structure, then they came, then they give you a higher low around these areas here. It's also something that is true in that case, of which also if you go to the weekly, you realize that on the weekly, necessarily they didn't change anything. They were still bullish. If you look at its structure well from the weekly, they were still bullish also. After breaking that structure, here there was a sweep that happened there. So you literally realize that if I mark this level here on the weekly, break there, they broke there, they came to this level, they did a sweep. So on the lower time frames, the market you can actually find it below there. If I find it below there, you realize that someone can actually think that, what is this now? Because if you look at what most people have been taught, they can literally say, oh, there's a change of character. Is it true? Uh technically it's not it looking at both time frames, not only looking at one time frame. If you're looking at one time frame, it can actually appear as truth, yet it's not true. It's not true. It's not true. It's not true. So if you are going to look at both time frames, both the daily and the weekly, you basically come to a conclusion that it was basically a sweep, right? And to prove that it's a sweep, this structure was supposed to go and break there. So you can, even after you you've come to a realization that that was a sweep, the structure itself will also prove to you also that that was a sweep. The market structure itself also, it will prove to you that indeed that was a sweep. Indeed that was a sweep. The only proof there in this case was to come and take out that level and also not shift inside here, maintain that bullish overall structure to the upside, of which they literally did. So here, right there on that zone, that was the shift to the upside, of which if you look at that whole zone, right? If you check this, the bottom of our monthly range, and obviously you're going to anticipate the shift to the upside there, of which here, if I look inside, which is my sub inner shift there, it literally shifted around there, of which there that was where the positions could have basically started from there. So if ever I had access to go to H4, H8, I could have even shown you that indeed. So yeah, even if you followed structure through, follow the idea of structure there, looking at my candles, they still maintain bullish order flow even on the daily. That's my last high, my last low, my current last high is there. So if I protected all my positions, as I said, even on the lows, even if I was protecting on the all the lows throughout here, for example, obviously, yeah, I was going to obviously as they were going like this. By the time they give me new lows, I can just shift stop loss to break even. Then yes, they will be going. My lows here can just be other levels that I'll be looking forward for potentially. If ever my low is fully broken, that's when I can exit the trade. If ever the law is what fully broken, that's what I normally do, especially if ever I hold the trade for days like this. The most important thing is for them to close below. So sometimes I can leave my stop loss maybe somewhere, maybe on this. For example, let's say my last low is here. I can leave my trades on the previous one just below my last low. My last low is that one. The previous one mostly is literally somewhere around here. I can say somewhere around here, right? That's my previous one below the last one. The last one is there. So putting it there, it's safe because even if they come and sweep, they will sweep and mostly not come there, right? So that's how I also extend holding most of the positions like this. So even if I was going to be trading, even if I was going to be taking trades throughout here, remember here, the most important trade is here at the beginning, which was actually 30 July. Imagine 30 July to October. July, August, September, October. That's like 3 good months of the market just pushing in one direction, right? So throughout the entire time there, all that I was doing on the lower time frames was basically identifying that structure shift. Once I see that structure shift, or I mark my range, my trading range throughout that entire movement on the daily. Once I make my trading range on the daily, because I'm trading inside a monthly range, even once I mark my daily range like that, marking the high and the low of my buying range, I know most of the shifts that will happen to the upside of things. Most of the shifts that will basically happen on the upside side of things, right? Most of the shifts they will basically happen on the upside of things. So what I'm talking about now is something that is beyond. It's beyond what most of you have heard. The trading methodology that I'm presenting now is beyond what most of you have heard. So here, as I said, throughout the entire time, because on the monthly already, I no longer need to go back there because that's my high and my low of the monthly or whatever. So even after taking out my daily like whatever level or my daily high like that, even if you go to the weekly, the and you see they were maintaining all the lows were being maintained there. They were still bullish. So even if I mark my range on the monthly, official monthly, that of my range was literally my last range was literally here. Then my next one was this low and this high, this low here and this high. That's my current next range. So once I mark my ranges like that on the monthly, right? Here my last bullish range is literally this low and this high here. So once I mark like that on the monthly, even if I go down to the lower time frames on the daily, whatever, I'm just aligning everything that I'm doing with that entire idea. So that was my monthly range, buying range. So whatever pullbacks that were going to happen on the lower time frames, so long they happen within there, they were basically still considered as pullbacks. They're basically still considered as pullbacks. Right. So if you look at remember we're still on the daily. If you look at this structure, so potentially they now shifted there, kind of shifted there to be bearish inside just for that moment of each. Even if you exited your buys, by the time they realign here, because you know that on the monthly and on the weekly, we are still in a buying range. By the time they realign like that, even if you follow the break of structure or whatever principle, you could have bought here, you could have made this man again. They came back to the same zone, they shifted again. All of that was money that you could have made. So here, from this zone to that zone, you would have made this money with, I'm talking about the extra buys that one could have taken, right? Let me just pause a bit. I'm talking about extra buys that one could have taken. This one, you could have made this money. This one, you could have made this money. So yeah, they haven't broken that level. If you look at it nicely from the daily, they came, they didn't break it. So most of the times when I see them not breaking a level like that, sometimes it can be due to the fact that they want to give you a slight major retracement within. Remember, this is still your monthly buying range. Let's go back to the monthly and see if ever it's still our buying range or they now have a new structure. So you're looking at the monthly. Our new range is actually our new range. The low of the bottom of that range, we're looking at something like here, and the top is literally right there. So on the monthly, they are still bullish. On the weekly, they are also in that whole entire range, which they've shifted bullish up there. If you notice here, the first time they came on the weekly, there was no change there. Structure was still bearish. So they kept on being bearish up until here. So potentially You could have bought all those arrows or those entries that I showed you on the daily were other entries that you could have entered, other buy entries that you could have literally entered. This one you could have bought, this one you could have bought. Then they came back to actually an extreme level. Let me mark this. If you see this low, that's an extreme low because if even if you're going to use this higher low, higher high, that's a higher high, that's a higher low. So they're on the higher low there. That's where they tend right there, which is within our monthly buying range. And obviously, I was going to get this entry earlier. If even if I was using my H4, H8, I could have gotten the entry earlier. Obviously, I'm anticipating them to break there. The next target after we break is always the next major Fibonacci level like that, which is negative 100% in this case. But all of these profits were profits that were were very much possible, right? Very much possible, very much available for someone with this level of understanding. Someone with this level of understanding that I'm portraying right now. So if you go back to the monthly, going back to the monthly, right? Which is something that is fundamental, especially every time when a major, once your major, let's say you market daily, a major daily level, once it's hit, the most important thing is always to 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 go back to that higher time frame. Once you go back that higher time frame, definitely it will give you that much clarity of where we are heading next. So yeah, just looking at structure and looking also at my Fibonacci idea. Once we hit negative 100%, according to me, that's a full move that would have happened on the markets, right? That's a full move. So even if I'm going to use the major Fibonacci, let me see the major Fibonacci. The major Fibonacci, we've actually tabbed negative 61.8. And according to that one, negative 100 is up there. So still, even if they are going to still push, you have somewhere where you know that potentially they can still head towards that level. But even if you have a target like that, you still also have at the back of your mind that even if they give it, they're going to do a pullback. Those things are actually things that are also possible. So if you look at my monthly, even if I was maintaining my monthly buying ranges, I was still going to catch all those trades that I'm showing you on the lower time frames. So all the zones that I was going to mark within my daily structure are the zones that are within my monthly range. If I have a monthly range, if I have a monthly range, like if I have a monthly range, once I mark my monthly range, I draw zones on the lower time frames based on that range, on that major range. So all these zones, they are within that major monthly range. So that's why those trades were very successful like that. And you could have even held them beyond the TP area that you're anticipating. So here also, I can see there was also an entry opportunity right here because there were some shifts that happened here of structure going to the upside. Because even looking at this, that was a break. Someone could have taken that as a break of structure. So even if, let's say, I decided to exit, even if I decided to exit here, even if I decided to exit there, that was also still good money. Looking at the fact that this is gold that we're talking about, this is gold that we're talking about. So from there to there, just like that, it's good money. Even here, after they realign here, you join those buys, came back again, you join again. You're still going to make good money from that zone as well to even that next major Fibonacci level. They're up there. So all of these were still good, powerful opportunities that were going to give very good money on gold, very, very good money. Looking at the fact that, remember, I said even if I was going to focus on gold alone for during that whole period, of which there's also a mystery to focusing on one or two pairs. There's a mystery to that because, especially when you're at this level of understanding that some of us are at, right? Whereby you have mastered the chart to an extent that you know what makes the market to go up or down. You now know all those things like the back of your hand, right? So when you're at this level, like mine, there, having one, there's an advantage to having even one pair. There's a serious advantage to that. There are advantages to focusing on lesser pairs. There are advantages to that. There are advantages to that. I'm never going to lie to you. There are advantages to that. Focusing on less pairs, especially when you're at the level of understanding that I'm at. So if you look at structure, well, structure kept on being bullish. And even if you're going to apply the principle, like what I'm saying, starting with the monthly, like this, right? If you go to the monthly, my buying range was still my buying range was still being maintained. Once my monthly range has been marked like that, even if I go down to the daily H4, H8, H1, even if I go lower, I'll still remain profitable in the sense that I know where to anticipate my levels, even if I'm going to have any pullbacks throughout the entire moment. So on the weekly, we're still bullish both major externally as well as internally. We're also still bullish. So when you're still bullish like that internally, and most of the times when you see them, when you see the market still bullish internally, they will be wanting to reach a certain level first before creating that major swing major swing external leg, of which here they've hit negative 100% according to my major structure, of which one thing that I know about that is whenever they hit that, mostly that will be the end of a cycle, major cycle. Most of the times, it's usually something like once they get there, they can. Those are the levels that they can potentially use. Most of the times. Remember, I said most of the times. It's usually like that. You might not get this if ever you don't understand most of the. So for this particular section of the video, I'm going to stop here. I'm just going to stop where the market is there, which is literally in 2011, 2008 to 2011. That's like 3 good years. Imagine 3 good years of just trading gold. How many opportunities were available? How many trading opportunities were so much available at your disposal? My last major buying range, or my last major buying ranges, were literally, in this case, it was literally here, obviously here, this low and this high after we broke out there. Obviously, we had another next range, but just from that green one, if you go to the weekly or even the daily, on the weekly we shifted here, on the daily we actually shifted earlier, that in that whole zone there, right? We shifted here first here, we came back again, we shifted again. So even if I entered buys initially here, obviously around there when they changed, they you can exit. Then they came back again, they shifted again. So there you would have bought, there you would have bought, right? That was where our entry was going to be. My stop loss, once we've done the shift like that, just below here like this. Then obviously, according to TPs, we have that major 100% zone, which is literally there. If you follow even your daily ranges, what I was doing throughout every single day, if ever I was going to add more trades or more positions to that whole entire movement, I was just going to be marking my daily ranges. The same thing that I'm doing going to the monthly, I mark my monthly range like that. Then if ever if there's any pullback that will happen to happen within my bullish buying range, whatever. So that's where all pullbacks will happen. So it won't even make me to I won't necessarily exit positions like what I see most people doing. Most people they just exit positions out of a lack of understanding. It's all a lack of understanding. So yeah, they kept on being bullish, here. They created new highs, came back in the zone, still bullish. So I'm just going to stop here for today. Episode 2 is going to come potentially tomorrow. But this is just the first episode of uh of of the dynamics. So just to end things, I just want to be so brutally honest with you. The way price was being moved ever since the market started moving. It's the same way price is still being moved today. I know some people can come and fight this point, but it's still the same thing. Remember the difference that I told you that the only differences that people might be thinking are differences as said things like volatility, things like how fast it's now moving, how fast it's now responding to news, blah, 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 blah. Those are the changes that people can say, the markets have changed. But literally, from a major institutional technical point of view, nothing has changed. So, guys, this is basically the beginning of a serious journey for me. Yes, because I've publicly now came now and told you guys, hey, this is what's going on. This is what we are projecting. This is what we are looking forward to achieving, and it's not something that I can hide because already it's public now. It's something that I believe it will inspire most of you, even as throughout the entire process of the whole thing, you will be so much inspired because you definitely see new levels of growth, even in terms of understanding as we go deeper and deeper. Because the more deep you go in terms of understanding, the more deep you still go. So people, they look at me today and they are, hey, so most people, they are shocked. Hey, what is this? What is... But myself, because I'm now in the deep, I'm now used to the deep to an extent that I'm now looking forward for the next deep. Most people, by the time they get to this level of deep, which I'm at now, already personally, I'll be at a serious higher level. That's why it's very wise to make sure that anyone whom you choose to become your mentor, make sure that there's someone who is always deep and who is always seeking for the next deep. So that even when you now understand the deep that he introduced to you, you still also know that there's another deep that this guy is already at. So you still need him to show you the next deep that he would have gone to. So it's always good to have a lifetime mentor. People like myself, people who always be be going deep, 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 and deep. So I'll come for the next episode two. Episode two, we're going to proceed straight away from where the market is, but literally just explaining everything, just to summarize almost everything, how gold was moving from 2008 in November up until there in 2011 for 3 years basically, how it was moving. For the next episode, I think we'll cover from 2011 I think up to, I don't know, depending on how, because the most important thing is for you to understand the entire process. It's not about me. It's not about me having 100 episodes, right? We can have 100 episodes, but the most important point is for people to understand the whole dynamics. So that's where we turned bullish there, and we kept on. If you look at, when institutions look at price now, they can, in their books, in their records, they can even record that gold was bullish from 2008 all the way throughout to 2011. We're still bullish. Gold was still bullish. It never turned bearish. Are they wrong? They are 100% correct, brother. You might say they are wrong because you're looking at things maybe from, even if you're looking at things from a lower time frame perspective, that lower time frame, it kept on maintaining bullish order flow. So what are you saying? What are you talking about? They are correct. So they were basically bullish. Imagine for 3 solid years, just bullish. So if I was now coming back to the lower time frames, my focus was supposed to be there on the same momentum, which was a bullish momentum for 3 good years. Even if I came back to the lower time frames, my main focus, even if I was going to scalp opposite trades that were opposing the bullish nature for those moments, like where you were having those minor pullbacks on the daily, those minor pullbacks that are happening along the way, pullbacks like these minor, all these black candles that you're seeing, these are minor pullbacks. When you go down lower there to the daily, even H4, H1, those will be minor pullback moments. But still, at the end of the day, at the end of every month, you realize that my bullish range idea was still maintained, or the overall bullish momentum of institutions was still maintained even after those minor pullbacks. So whenever, one of the biggest ideas that I currently have developed from the markets is, whenever you identify that overall direction where institutions are heading, you can make those your major swing trades, your major swing positions. Then if I'm going to take any counter trade, I'm just going to either day trade them or just scalp them, right? Day trade them or just scalp them, those counters, but mainly swinging and position trading those trades that are in line with the overall institutional direction. So, guys, for this first episode, that is it. I don't want to make this longer. I'm going to come back to next episode two as I'll be proceeding. I'll be going slowly, slowly, slowly on different major pairs that I've seen most of you trading, and also personally that I also you look at. But gold is also a very, very interesting pair, especially when you're now at this level of knowledge and understanding that I'm at. Gold is a very good pair. When you now know how to trade, the most important thing now is focusing on the pairs that really move. So, guys, that's it. Make sure you like the video. Make sure you subscribe. Make sure you comment. If you have any comment, make sure you share the video. It's something that is profound, according to me. Something that is profound that will definitely leave you inspired, leave you wondering. So, what are these? What have you been taught all these years? Most of you, you have literally been taught the shallow, the shallow side of things. And as far as we know, the shallow side, shallow understanding will always produce shallow results. Shallow understanding, shallow results, deeper understanding, deeper, higher level results. So, guys, that's it. This is episode one. Episode one. I'm coming back for episode two. See you next time for episode two.